Hi everyone, thank you for tuning in. My name is Matt Kerfman and this is the August 2018 edition of Matt's Minutes. The headline that I thought I would focus on for this is recently we've seen a lot of articles that kind of focus on doom and gloom. So I thought we could title this session Doom and Gloom or Continued Growth. And so the main article that I came across recently, it was titled, Why Are Markets Acting Like a Recession is Coming? Well, we don't think a recession is coming in the near term. We've been very outspoken that we think potentially by the year 2020 that could be a trigger that we tip over, but not quite yet. We're seeing a lot of extreme headlines, and so I just want to kind of put a reminder out there that extreme headlines nowadays, with everything online, a lot of authors get paid by click. And so what happens is the more extreme headlines grab attention, you click on it, and therefore they show and are grabbing readership, if you will. And sometimes, they're very factually based, and sometimes they might just be a lot of noise. You may remember from one of my last one or two Matt's Minutes, I gave an example of an older experienced novice lawyer trying to train a young, just out of law school lawyer who's going to argue his first case before a jury. Basically said, if the facts are on your side, argue the facts. If the law is on your side, argue the law. And if neither are on your side, just pound the desk and confuse the heck out of them. And so I think that trend still seems somewhat prevalent when you look at news articles recently. And so again, try to distinguish. Some of it is noise, some of it's factual. We try to take it all in to help make determinations about direction for decisions in your portfolio. So what is the gloom story? What are the headlines that you're really seeing? We've talked about trade disputes and tariffs. We've talked about rising interest rates. More recently, Turkey, Argentina, emerging markets, they seem pretty fragile. But it seems to be trending a little more towards resolution than it does towards a contagion that basically affects the global market. And then the other thing coming up I haven't quite mentioned yet is we're nearing the midterm election season. And so historically, you've seen a market correction, which, a reminder, is a dip of 10% from current numbers. But those who rode through historically have followed by 20 to 30% returns over the following 12 to 18 months. And so we just want to be aware of that. Anytime there's uncertainty or change causes the market to move, but we want to go back to fundamentals. So what is the growth or the expansion argument? One, we've talked extensively this year on corporate earnings growth alone. Those numbers have continued to become stronger and better. We've talked about tax reform. A lot of businesses are starting to feel the benefit of tax reform. A lot of consumers might not feel it until they go to file their 2018 taxes in the spring of 2019. And I think there'll be a lot of realization then, and that acts a bit as an economic stimulus. We've had positive and increasing GDP. What's GDP? Gross domestic product. So the economic output from the U.S. in goods and services. And we've also had very low unemployment. And so again, we would tend to err on the side of the growth and expansion side of where we think things are continuing to go. That doesn't mean stocks and the market and every sector in the market grows in a straight line. But we want to use those as tools to help you make decisions with your portfolio and your life savings. So just keep in mind the extreme headlines. They do serve a purpose, and for us, they serve a purpose, if you will, to keep us on our toes. And also another analogy I came up with is think of it as, making sure we're going through a fire drill, not the actual fire. And so our recommendation is to continue to stay the course. What do I see and what does David and Dan see as we continue to move through the next few quarters? I think we're going to continue to get exposure to big tech names through the NASDAQ 100 or even through the S&P 500. And the other thing I wanted to touch on is where and when appropriate. We've kind of hinted over the last year at different variations of private equity funds. And so if there's a scenario where that may be appropriate, we'll start to build that into our performance reviews with each of you along the way. Next Wednesday, I wanted to remind you, which is September 12th, we have two halftime reports, 3:30 and 5:30, I believe, are the times, but they're over at the Ella Sharp Museum. And so if you haven't already signed up, make sure and reach out to us at questions@richmondbrothers.com, as seats are going fast, and those are typically very popular events. And please remember to pre-submit any questions that you may have, and we're going to try to build some of those into a section of the presentation so we can be addressing things that are of most importance to all of you. So with that, I will close out the month of August. Thank you so much for tuning in. Thank you for being part of the Richmond Brothers family. We are honored and privileged to have the opportunity to work for you. And as always, if you have any questions, please reach out to us. We are here to work for you. Thanks so much, and make it a great month.